Good morning. Welcome to this series of the Daily Morning Market Call. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial broker, linking you to the global markets. Now, this is going to be a pre-recorded YouTube video to mean that you could visit the HFM YouTube channel, like, subscribe, and click on the notification button so that you're not left out in future content. So I'll give a 3-second moment of silence to allow you execute that with little or no hesitation. Very nice. So with that out of the way, yesterday we had quite a number of economic data coming out, which we know that economic data, which is in the approaches of market analysis and fundamental analysis, where we observe economic, socio-political events or happenings and the effects of that on the financial markets. Now, with that in mind, yesterday we had a number of economic data coming out, with the most significant ones being the global service PMI, or purchasing manufacturing index, where we see business leaders in the manufacturing sector giving their prospects on the economic growth, and it came out negative at 56.8, with the previous being 56.1, and the consensus being at 58.5. So we see it came out negative 1.7, suggesting weakening United States economy. Also from Canada, we had global service PMI, which is essentially of the same nature, came out quite negative at 48.2, with the previous being at 51.5, suggesting a weakening Canadian economy. Of course, we know that the economic data printed from these parts of the world will tend to affect all asset classes, beginning with our usual suspects, currencies, commodities, and finally stocks and indices. Now, we also had inflation rate year on year coming from Germany, which came out at 2.6, with the consensus at 2.4 and the previous at 2.2. Now we see an improvement of plus 0.2%, which will strengthen the euro. Now, as we might all be aware that the euro is the currency used by quite a number of countries, 20 as we speak, with the 20, the leading ones being Germany, France, and Italy. So when we see a positive growth in the German economy, we know, of course, it's contributing significant to the strengthening of the euro, because those three countries contribute up to 40% of the wealth of that particular part of the world. Now, with that in mind, beginning with Euro USD, we see that yesterday the daily candle attempted to close above the key level at 1.03750 unsuccessfully. Currently, we see candle printing to the upside, and if I go to the 1 hour time frame to see it clearly, we see that we have a key level here. We'd want to see the highs being taken out to suggest that particular narrative and give impetus to the reflection of dwindling US economy and recovering euro economy. GBP USD from the daily time frame, we see that we are having a pullback. We would want to see the highs to be being taken out to suggest that we are getting in for buys, because of the strengthening England's economy and the dwindling US dollar economy. If I go to a lower time frame to see clearly what is happening, we see that we have closed above this area of interest, and we see quite a unique relationship between GBP USD and Euro USD, where GBP they are positively correlated to mean they move in the same direction, but GBP tends to be a step ahead, if I may like, showing here in technical analysis closing above this area of interest or resistance at 1.25400. AUDUSD seems to be rejecting this area of interest on the 1 hour time frame. Let me go to the daily so that we have a clear top-down analysis. We see that we were in a clear downtrend, but due to the dwindling US economy printed from the services purchase managers index, suggesting a weakening economy from their prospects. So if we go to the lower time frame, we see this candle is retesting this area of interest. Would like to see it close above to guarantee give us some sense of confluence to get in for buys. For USD CHF, now we see we are in the US dollar based currencies, so it's going to be moving inverse. We see yesterday daily candle being bearish but closing with a long wick on from the bottom. If we go to a lower time frame to see what is happening, would like to see the lows being taken out because of the new change of character from an uptrend to a downtrend to give us market bias. But if we go to USD JPY, we observe that we're in a consolidation, and a consolidation or ranging market is not quite attractive to us as traders and investors. Would want to see either the highs being taken out or the lows being taken out to give us market bias. For USD CAD from the daily time frame, we see that yesterday closed with a bullish Marabuzu candle, forming a double top, suggesting that we could have a change of trend. So we'd want to see, if you go to a lower time frame, lows being taken out to confirm that particular bias. With that in mind, as a disclaimer, this by any chance is not financial advice. It is meant for education purposes only. Kindly observe risk management and do your due diligence. And see you tomorrow at the same place, the same time, to do things the same way that has proven consistency. Until then, take care and God bless.